Anuj. Well, I think Infosys has once again showed that the element of negative surprise has more or less been eliminated. They have been managing the expectations very well. That is as far as the stock market is concerned. But I think on an overall basis, despite and in spite of the fact that there are going to be some concerns about the margin front, I think what is more important is that the volume growth is coming back. And if this volume growth comes back the way it is, I think overall rest of the concerns will fall in its place. And Infosys now will emerge more as a stock to be relied on. And a lot of people who had really shed Infosys from their portfolio probably will now take it back. So all in all, I think it shows all the more signs of great stability. Maybe it's a Narayan Murthy effect, no doubt about it, without taking away anything from the management, the current management. But I think overall Infosys would emerge as the preferred stock for a lot of investors who are hunting for a safe bet.
Okay. Dilip, do you think they could beat their guidance quite comfortably? What is the next 2 quarters revenue growth projection that you're working with, which would translate into FY14 guidance according to you?
Well, I think we still feel that though they have revised the lower end of the guidance upwards, I think they will still exceed that particular guidance very comfortably, is what it appears. And I think overall, I'm still banking on the fact that the volume growth, which came at 3.1% in dollar terms in this particular quarter, would continue to do significantly well over next 3 to 4 quarters. So I think that being the case, and the fact still remains that the free cash, EBITDA to free cash still remains very robust and very good. So I think that also gives a lot of comfort. So I think I would still look forward to Infosys really revising their number upwards for FY13-14, and maybe the 14-15 market itself will up their guidance, up their expectations.
Dilip, the other stock in focus today has been Ranbaxy, and I know you track it. You have been tracking it for long. Do you think the worst is getting over for this stock, and can one buy at current price as well?
Anuj, as far as Ranbaxy is concerned, we have been tracking very closely. It's only one of the few stocks where the past is coming back to haunt them. And at times, I believe it is very needless because all those things are very much in the public domain. But maybe the way the articles and the news press items appear, they appear very daunting. So I think the past is really behind us. What we really need to see is the future really going to unfold? Are the margins going to go up? I think this is what we are thinking, that overall operating margins, core margins will continue to go northwards. And I think this is a stock which one can still bet on. I mean, there could be some bad news once again about the past, which could rear its head again. But all in all, I think if you look a little more forward, I think Ranbaxy still looks reasonably available at the current levels. And I think it's a good investment bet.
Yep, that stock is up 25% on a month-to-date basis and 14% this week itself. But Dilip, just getting back to the IT space, would you take a position on TCS ahead of its numbers next week then?
Well, I think ideally speaking, one should take even TCS. But our preferred choice is that we have Infi, we like Wipro. I think Tech Mahindra is something where everybody seems to be on the consensus side that it's a good buy. Because you have ROEs which are significantly higher than say Infosys or even Wipro, and the valuations are still 25% cheaper than any of these stocks. So I think Tech Mahindra is another stock which probably one should look at it. TCS is once again more of a defensive bet, but our preferred choice would still be Wipro and Tech Mahindra.
So Dilip, let's get back to the market then. We've seen a fair bit of rally. 6,100 is here. How much more? Do you think the market is getting a bit complacent, running ahead of itself, or do you think this move is justified?
Sure, Anuj, I think this is always going to be a challenge, really trying to look at the markets, because there is simply no doubt that the market is significantly ahead of the fundamentals, whether it's the economy, whether it's the Nifty EPS growth, or whether you measure it by way of PG. or whether you talk about recovery in the economy or the uncertainty on the international front too. But what is really changing the whole thing is the tailwind in terms of the FI inflow, which is really pushing the markets up. So whether we think that the markets will run away from the current levels, I don't think so. I think markets will be capped because fundamentals will definitely catch up, and at the current levels too, markets are not cheap. So I think 6,200, 6,300 will be the maximum that one can think of if at all there is once again a gush of FI flow. But otherwise, I think I would play it very cautiously, and I think I still feel that markets will remain volatile, and we may still see a level of 55, 56 over next 3 to 6 months.
Okay, Dilip, just before we let you go, do you expect the market to react in any way to all of the macro data that is lined up, IIP, CPI, post markets today, and WPI on Monday?
I'm sure, but I don't have the numbers immediately on my mind. But I think I'm sure I'm talking about all this, which will keep the volatility of the markets very much intact, rather than markets being in a very comfort zone. I would still look at markets moving very erratically and very in a very volatile way over the next couple of months.
All right, Dilip, thanks very much for joining in. So that's the view coming in on PLL. But currently for the markets, we're holding with a gain of around 1%. Strong gains coming in. Volumes on the higher side, 65,000 crores is what we've done in terms of participation. Take a break and come back.